Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into Ascent Industries Co.'s latest 8K filing, and let me tell you, it involves a company buying its own stock, which sometimes can be a good thing, but it also can be a company trying to artificially inflate its stock price. Let's find out what's going on. This report is dated February 17th, 2025, so the events discussed happened on or around that time. The company we're talking about is Ascent Industries Company. They're registered in Delaware. Ascent Industries stock trades under the ticker symbol ACNT on the Nasdaq Global Market. It looks like Ascent Industries is not an emerging growth company. This means they have to follow all the standard reporting rules. Now let's get to the main event, item 8.01, which is about other events. Basically, this section is used to disclose important company happenings that don't fit neatly into other categories. On February 17th, 2025, Ascent Industries Board of Directors gave the go-ahead for a new share repurchase program. This is also called a buyback program. This means the company is authorized to buy back its own shares from the open market. The company is allowed to repurchase up to 1 million shares of its own stock over the next 2 years or 24 months. They'll be buying these shares at the price they are currently being sold for, which is called the prevailing market price. They can do this through regular market purchases or through private deals depending on what makes sense given the current market conditions. This gives them some flexibility in how they execute the buyback. The money for these purchases will come from the company's available working capital, meaning cash they have on hand that they use for day-to-day operations. Once they buy back the shares, the company can either keep them to reissue later or just cancel them. If they cancel them, it reduces the total number of outstanding shares. It's important to note that there's no guarantee they'll actually repurchase all 1 million shares. The company can stop buying shares at any time. If the management team decides it's no longer a good idea, maybe the price is too high, or maybe they need the cash for something else. Now, why do companies buy back their own stock? There are a few reasons. First, it can boost the stock price. When a company buys its own shares, it reduces the number of shares available, which can increase demand and drive up the price. It can also make the company look good to investors, signaling that management believes the stock is undervalued. Another reason is to increase earnings per share, or EPS. EPS is calculated by dividing the company's profit by the number of outstanding shares. If the company reduces the number of shares through a buyback, then the profit is divided by a smaller number, which results in a higher EPS. Investors like to see higher EPS numbers. However, buybacks aren't always a good thing. Sometimes companies use buybacks to artificially inflate their stock price, especially if they don't have any better ways to use their cash. Also, a buyback could be a sign that the company has no other good investment opportunities. Instead of investing in growth or innovation, they're just buying back their own stock. Also, if the price is inflated, they could be wasting money. Finally, item 9.01 lists the financial statements and exhibits included in the filing. The key one here is exhibit 99.1, which is a press release about the share repurchase authorization. There's also exhibit 104, which is a cover page for the interactive data file. So, what does all of this mean for Ascent Industries? Well, the share repurchase program could provide some support for the stock price in the short term. It could also boost earnings per share, which could make the stock more attractive to investors. However, it's important to remember that there's no guarantee the company will actually repurchase all the authorized shares. And as we discussed, buybacks aren't always a sign of a healthy company. It really depends on the company's overall financial situation and its long-term strategy. Looking at Ascent Industries, it seems like a bit of a mixed bag. The buyback program could provide a short-term boost, but it's not a long-term solution. The real question is whether the company has a solid plan for growth and innovation. Ascent Industries looks like a company trying to find its footing. The buyback might help in the short term, but I'd be looking for more concrete signs of growth before getting too excited. Based on their current financials and the uncertainty around their long-term strategy, I'd say a fair price range for Ascent Industries stock is between $10 and $12.50 per share. Overall, I'm leaning slightly bearish on Ascent Industries right now. There are too many unknowns and not enough clear signs of long-term growth. The buyback program is a nice gesture, but it's not enough to convince me that this is a company poised for significant success. Thanks for watching. If you found this analysis helpful, please subscribe to Corporate Decoder for more insights into the world of corporate filings. Like and comment below what company you'd like to see decoded next.